Well, hello friends, it's Victory with you again and welcome to my YouTube channel. Here I trade binary options on the PocketOption platform, and in the description below this video you'll find a link to my Telegram channel where you can ask me any questions you may have, and also if you write to my private Telegram channel, you will find my daily trading signals published there, and also where I run super marathons to help you increase your deposit from $150 to $5,000. Guys, this happens every week. Be sure to join this opportunity. So in addition, if you text to my Telegram channel, if you text to my Telegram, you will get a link to sign up for PocketOption with a gift deposit, 50% absolutely free as a nice bonus. So today we will unwind the deposit. I start with $200. I will always go to all 100%. As I see now the price is approaching its resistance, I go into the purchase at 100%, as I said. I propose to discuss today how to determine the support and resistance zones. Support and resistance are the two main elements that are used in the analysis of price patterns. These two tools will be extremely useful to us in working with price patterns. Many people are generally lost in use the term support, where resistance means the vice versa. So how can you get confused here? Only God knows. In fact, these levels are just zones on the chart. There is a high probability that the current trend may at least slow down. Support and resistance. In the legendary book Technical Analysis of Stock Trends by Edwards and Magee, an epic work that has survived 9 reprints, which has been read on the Wall Street since the World War II. So support is defined as follows: the power to buy real or potential, which sufficient volume, which allows you to temporarily stop the price drop. So the deal closed at $328 plus. As I see, the price hasn't yet reached the resistance, so I go back to buying before it at 100%. Thus, we get our first principle of support resistance analysis. The potential support of resistance level is the previous high or low. When the price falls for the third time, it continues its movement, or in other words, break through the support. Accordingly, to determine the potential resistance, you need to look at the previous lows, and for resistance, for highs. Hence, our second principle. Support turns into resistance when the price goes up. In construction, the floor is literally a support, but if you fall through it, the floor will become a resistance. This means a ceiling. Why, by the way, support and resistance are constantly changing roles? Do they have nothing to do? For this, we thank the fascinating market psychology. Here's the thing, no one really likes to get losses. As a result, many people try to get rid of the wild feeling of loss by leaving the deal early. Others pull and pull and pull until the price returns to where the asset was bought. Now our victims of the fire can immediately sell the asset and fix a draw, whereby creating a supply sufficient to slow down the price growth. Hence, our third principle. Resistance turns into support when the price goes down. The deal closed at $564.16 plus. It's too early for reversal or breakdown, so I'm going to buy 100% again. How to identify potential support and resistance. Previous lows and highs. We have already figured out that the previous highs and low acts as potential support or resistance levels. Highs in general are extremely important because they are constantly being stated by many market participants who enter the market either at the very maximum or next to it. When the price drops, when human psychology is a funny thing, the people do not accept the loss and do not close the position, but continue to hold it and keep it because it is less painful psychologically. So then you close the position and fully realize the money is lost and it's time to return to the factory and when if they take it. Accordingly, when the price returns to the previous maximum, those who bought at this level have an irresistible desire to close the position and go to zero and begin to frantically close their positions. Those who bought at lower levels usually want to make a profit at the old maximum because it's psychologically understandable to them. A deal brought me $818.03. So the price doesn't unfold, but it doesn't break through, so it accumulates. I will go into the purchase 100%. So the magic of round numbers. Support and resistance love to form around round numbers. The reason is clear. All these 10s, 50s and 100s are the simplest psychological market on which traders justify their decisions. In the 70s, the Dow Jones Industrial Index still couldn't overcome the level of 1,000. Gold in the 80s and middle of 90s was constantly hanging around the magic level of $400 and so on. The round level is a potential pivot point, which is interesting to us. Trend lines and moving averages are dynamic support and resistance levels. Our good trend line always reflects the underlying trend. One of the simplest rules for determining the significance of a line is how often the price touched it or approached it. The more, the better. If the price constantly returns to a certain minimum, this level becomes a strong support zone. So the deal closed at $1,112.52. So I will finish this. I started with $200 and now I have $1,112. So I thank you for watching this video till the end. Don't forget to like it, write your comments down below and make sure to subscribe to my channel because there is always only interesting information and the most interesting analysis. So that's all for today, guys. Wish you luck in your future trading sessions and see you in the next video. Bye.